Hi everyone, this is Paul Stewart again from Segmented Solutions. Welcome to part 4 of our 4-part SaaS Planning Masterclass. In this final video, we'll cover some of the more advanced SaaS planning issues, such as creating losses and making contributions of up to £500,000, and how to use your SaaS for lifetime limit planning. Of course, as things get more complex, your free SaaS consultation will come into its own. So don't forget to watch all 4 videos and book your call today. There's a link in the description below. So here goes, part 4 of 4, everything that you need to know about self-administered pensions. Thank you. Okay, so we're on the last part of our SaaS Planning Masterclass, and these are some of the advanced strategies. Now, please, nothing that we say here should be taken as formal advice. When we start looking at these advanced strategies and the details, everything needs to be bespoke for yourself, which is where the telephone consultation comes into its own, because you can't rely on me in a 5-10 minute video to actually nail 100% what your scenario is. And the last thing you want to do is to get any misconceptions. With a SaaS, there's a lot of planning that you can do, and we're not going to cover all of it here. If you want to know the detail, please get in touch. So, first of all, you can create a trading loss to go back into a previous tax year. So if, for example, you had made a profit last year and you make a large SaaS contribution this year, if that creates a loss from an accounting perspective, you should be able to carry that back and get a corporation tax refund. The other thing is larger contributions can be made into a SaaS, larger than the £40,000 per member, because as we've said in a previous video, a SaaS is an unearmarked fund and can fund for current and future members. And as long as the business is making a contribution that is justifiable under the wholly, necessarily and exclusively for the purpose of the business, and the business is now and the future, then you can put £500,000 into your SaaS and claim corporation tax in the first year. If you make a contribution that's larger than that, the tax relief will be spread. So if you're interested because you have a business that's making large amounts of pre-tax profits, then do have a conversation with us and we'll make sure that that gets set up properly for you. Working alongside a QNUPS, which is a qualifying non-UK pension scheme, it's possible to reduce or indeed eliminate the impact of the lifetime limit, and that will also allow you to make additional contributions. Now, I know that there are people who are financial advisors who are recommending transfers of pension monies into QROPSs, Q-R-O-P-S, QROPSs, and that's a triggering event with regards to lifetime limit, whereas putting money into a SaaS is not a triggering event. I've got to be careful here because this is not supposed to be an FCA authorised pensions advice session, but if you have a large pension fund, either from a previous employer or in a SIP, then please do come and talk to us about the lifetime limit planning. There are things that can be done to assist. You can also do planning with a SaaS to assist with inheritance tax, because you can have grown-up children as members of the SaaS and funds can be passed to whoever is a member. So if, for example, you had a fund of £2 million and there were 4 of you, you can allocate monies to the children and it will stay within the SaaS until such time as they draw benefits. So a good bit of inheritance tax planning can be carried out. Again, as with all of these things, if you have a complex situation, then please do speak to us, because there's a lot of detail under the bonnet. We're just trying to give you a bit of flavour. So let's have a quick look at a summary here. Your SaaS is a very valuable tax-exempt business tool if used properly. In the wrong hands, they can be a nightmare. So please, I cannot underestimate the importance of everything being determined by your own unique circumstances, and the only way that we can determine that properly is with a free technical consultation. It looks at all of your options, make sure that you understand what can and can't be done and how all the moving parts fit together. I'm very happy to spend time on the phone with you, because half an hour on the phone to save you a lifetime of harassment and unauthorised payment charges from inland revenue, very, very valuable indeed. Where required, we do have access to full FCA approved transfer advice. So if you've got a pension scheme from a previous employer and you're absolutely determined to look at your options for moving that into your own SaaS, then we can provide assistance in that score too. We have a practitioner service, and that allows you to step into the plate and become the administrator for your own pension scheme. You will therefore be an administrator, you will be a member, and you'll be a trustee, but you'll have the backup and support of experts who can make sure that you don't fall foul of any of the HMRC rules and regulations. Do get in touch, and obviously to use your SAS you have to have one in place in the first place. So if you go to segmentedsolutions.co.uk/SAS, all the steps are there, all the documents are there that you need to download. Everything you need to go from first steps through to having your SAS is laid out for you. My name is Paul Stewart. I'd like to thank you for watching my 4 videos on SAS planning, and we look forward to assisting you setting up and running your SAS in the near future. The email address sas@segmentedsolutions.co.uk. My phone number is there if you want to phone me. There's also the link in the description below which allows you to book your free consultation. It'll put it straight into my calendar and I will give you a call. Once again, thank you very much, and we look forward to speaking soon.